The process or the steps involved in recognition of intangible assets in the books of a company in case of an acquisition. So, what are the steps that you would follow? And especially as per IndAS 103 on business combinations. So, number one, what you would do, you will ask a question to yourself: is the asset that you are talking about or that you are looking at, is the asset separable from goodwill? Or does it arise from contractual and or legal rights? So if your answer is no, that means the asset cannot be separated from goodwill. That means it is not an intangible asset, it is part of the goodwill, right? So if an asset cannot be separated from the goodwill, that means if an asset does not have its own existence and therefore it cannot be separately identified, that means it is not an intangible asset, it is part of the goodwill. Then you ask second question to yourself. And what is the second question that you ask to yourself? The second question that you ask now is, can the value of the asset be determined reliably? So the asset that you are looking at, you got the answer of the first question, and that is the asset separable from goodwill? And your answer is coming yes. So if your answer is coming yes, that means this asset is meeting the first criteria for being identified or recognized in the books as a separate intangible asset. And what the question that you need to ask now, the question number two that you need to ask now is, can the value of the asset be determined reliably? यानी कि ये जिस asset की आप बात कर रहे हो, क्या उस asset की value reliably अलग से identify करी जा सकती है? अगर उस क्वेश्चन का आंसर आता है नो, that means the asset is a component of goodwill. That means this is not, since you, even though you are able to identify, even though you are able to separate the asset from the goodwill, but if you are not able to evaluate separately, that means it is not a intangible asset. It is component of goodwill, and therefore if the answer is no, it is component of the goodwill. And if the answer is yes, that means you can value the asset reliably separately. That means this is now an intangible asset. It has to be recognized in the books separately as an intangible asset. It would appear in the balance sheet under the line item intangible assets with this definite value. So this is the friends process that you will follow in case of a merger or amalgamation and identifying the assets that you have acquired and separating those assets between the tangible assets and intangible assets by allocating the purchase price that you have paid for that acquisition.